Coming up on Business Incorporated, IMF approves $487.5 million extended port facility for Angola. IFAD and Green Climate Fund scale up action to improve life, restore ecosystems in Africa's Great Green Wall. And Tanzania set sights on conference tourism. Hello and welcome to the program. Thank you for joining us. I'm Chimize Obi Iwago. Let's get the show started with market numbers. And our first port of call is here in Africa. Major markets were mostly negative at intraday as the NSE and JSE indices were marginally lower by 0.02% and 0.03% each. On the flip side, the EGX30 in Egypt was the only gainer by 0.56%. Kenya closed negative on Monday. It's a different picture in the Middle East, where markets we track were mostly positive at intraday. In the UAE, the Abu Dhabi index rose 0.40%, while Dubai's main index advanced 0.09%. Elsewhere in the region, Saudi Arabia's index was marginally higher by 0.05%. The Qatari index was the only laggard at intraday by 0.04%. At the UK, as top central banker Andrew Bailey has warned that the UK economy is suffering a very difficult period, telling the Scottish Chambers of Commerce that the latest COVID-19 restrictions will probably delay the recovery. He, however, painted an optimistic outlook, saying he no longer thought that Britain's unemployment rate would peak at around 7 to 8%. Well, let's see how the markets have continued to digest Bailey's speech. Let's talk to Juliana. Good afternoon, Juliana. So how are the markets chewing Andrew Bailey's statements at intraday?
Good afternoon, Chimize. Well, the FTSE opened as flat as a pancake early this morning, but at intraday, it's even slipped further into the red. I've got to tell you that even though Andrew Bailey's comments pushed the pound up against the dollar, it's really the abysmal retail sales figures that we had through from the British Retail Consortium earlier this morning. They have showed that in 2020, it was the worst year for retail on record. No surprises there. British high street was struggling before the pandemic, then COVID-19 struck, and it's gone downhill since that time. They recorded an overall fall of 0.3%. That's the worst fall on record, and I believe records began in 1995. So that's where all the sentiment is at intraday. The all-share is down 0.30%. The FTSE 100 is down 0.35%, and the FTSE 250, the domestic market, is down 0.11%. In currencies, the pound up on the US dollar by 0.58%, up on the euro by 0.56%, and up on the Japanese yen at intraday by 0.54%, Jimmy.
Well, while equities market continued to chew that data for the retail market, of course, the currency still looking at Bailey's speech. So what was Mr. Bailey's take on whether to cut UK interest rates below zero?
Well, Andrew Bailey, Bank of England governor, never been a fan of negative interest rates. He was a little bit muted about it when asked during his virtual speech delivered to big business leaders in Scotland at the Scottish Chamber of Commerce. He said, and I quote, "In simple economics and maths terms, there is nothing to stop it at all. This is the negative interest rates. However, there are a lot of issues with it." He said they would complicate banks' efforts to earn a rate of return, potentially hurting their lending to companies, and he doesn't want that to happen because, of course, companies need as much support as they can get from banks at the moment. Andrew Bailey is all over the news because this is really the first time that he's spoken publicly since we've entered this third national lockdown. His comments come after Chancellor Rishi Sunak did say yesterday at the dispatch box that things in this country will get much worse sooner rather than later, and that there will be no more economic stimulus for businesses until the budget on the 3rd of March. He spoke a lot about unemployment. Officially, unemployment in this country is at 4.9%. That is historically and internationally still quite low, but he doesn't believe that the data is right. Andrew Bailey thinks it's about 6.8%, though he doesn't expect it to get any worse, which I believe is why the pound was pushed up, because previously, about 6 or 7 months ago, he had projected that unemployment could rise by up to 8%. He doesn't think that that's the case. So yes, lots of chewings over Andrew Bailey, the Bank of Governors' comments earlier today.
All right, let's take a peek into some corporate news there. Royal Mail has published a list of 28 areas across the UK that no longer receive regular posts because many staff have contracted coronavirus or are self-isolating. What more can you tell us about this?
Yeah, I'm sure a lot of our viewers in the UK have had an experience. I've had an experience, you know. I just received a Christmas present yesterday that was obviously sent before Christmas. That's just how delayed the Royal Mail service is. Of course, we know that there have been an abundance of e-commerce shopping. So many more people have been shopping online, which means there has been an abundance there. But it's not just the exceptionally high volumes. Royal Mail have also said that a number of their staff, in fact, clusters in different service centres across the UK have experienced COVID-19 symptoms, which means they've had to close these sites down for a deep cleaning, and that has prevented letters and packages and postings getting out on time. It is to be expected. Royal Mail said they are doing all of they can to try and make the service as prompt as possible. I think the main concern really is about the over 80s. Many of them have been invited to take their COVID-19 vaccinations via a letter and mail. And of course, if they haven't received the letter, then they miss their slot. So it's worrying, but as to be expected, Jimmy.
All right. Enjoy the rest of the day, Juliana. And European stocks cracked higher this morning as investors remain focused on the latest coronavirus developments and the state of U.S. politics. All right, let's talk to Conrad. Hello, Conrad. Good afternoon. Good to see you again.
Good afternoon, Jimmy. Thanks for having me back on Channels TV.
First, it was the U.S. president. Now, Twitter has suspended more than 70,000 accounts used to spread the far-right conspiracy theory QAnon. It seems the tech industry is meddling with U.S. politics. What are investors saying?
You know, if we ask the share prices for guidance, there is no clear guidance. If we take Twitter and Facebook, for example, Twitter's shares are slightly higher here in Frankfurt trading today, Facebook's shares slightly lower. If you are classical investors, your focus is, of course, on the profit that your investment returns. And the impact of all this on future profits of companies is very difficult to evaluate at this point of time. Of course, you might get some bad press. Of course, you have the legal risk. Of course, you give up customers, but how much of an impact all this will have on future profits is difficult to say at this point of time. Investors, of course, know this. They too, they don't want to really discuss this in the open too much, because many investors, if that happens, are afraid that they also might get in the focus of controversial discussions.
All right. Anyway, what about social responsibility? EU regulators keep calling on tech companies to take responsibility for the content of their sites, but when they do, they go too far. Does it sound like a difficult balancing act?
It is definitely, Jimmy. Also, of course, the companies are often blamed to being too reactive, not proactive enough. And of course, also governments, they're facing this dilemma. They don't want, to obstruct the freedom of speech. But on the other hand, they're the ones to be responsible, that no harm is done in the country. But I think there's more to this. Let's not forget what happened in Washington last week, where really criminal acts, also parts of what Donald Trump twittered, can be at least considered bordering to treason or to other criminal offenses. If you are a company now whose services, whose products are used for such criminal acts, then of course you risk getting into the focus of a criminal investigation yourself. So, of course, this is what companies have to have in mind. It's more than social responsibility. It's also their responsibility not to commit, crimes.
And then Deutsche Bank has reported that it will end its business relations with Donald Trump. What are you hearing about this?
Well, Deutsche Bank itself is not giving out any comment, but of course rumors and reports that Deutsche Bank is seeking to get rid of Donald Trump as a customer have been out there for quite a while. Deutsche Bank is Trump's most important lender with about 340 million US dollars worth of loans outstanding to the Trump organization. But I have to say, Deutsche Bank has not been very happy about this loan. Many American prosecutors have investigated the origins of those loans. They wanted to know more. They wanted to be sure or know whether this business relationship is really kosher. So this business relationship with Donald Trump really brought Deutsche Bank some bad press. And this in years where the bank really struggled hard to get a better reputation, of course. What I can tell you as a fact is that quite a few weeks ago, the banker at Deutsche Bank New York, who was in charge of the Trump accounts, has left the bank. And already then it was rumored that we have to, get ready for change.
And I guess this is a developing story that perhaps you, Conrad, would always follow. And let's keep tracking that and others. Enjoy the rest of the day, Conrad. Stocks in Asia Pacific were mixed today, with mainland China stocks leading gains among the region's major markets. By their close, the Shanghai Composite gained 2.18% to 3,608.34, while the Shenzhen Component rose 2.28% to 15,460.03. Elsewhere, Hong Kong's Hang Seng Index advanced more than 1% as of its final hour of trading, while South Korea's Kospi declined 0.71%. In Japan, the Nikkei 225 ended its trading day slightly higher at 28,164.34 points, while the Topix Index advanced 0.16%. Over in Australia, the S&P ASX 200 dipped 0.27%. And U.S. equity futures were higher early today after breaking a winning streak as investors grew worried about stocks' stretched valuations. Dow futures rose 50 points. S&P 500 futures and Nasdaq 100 futures also traded in mildly positive territory. On Monday, equities dipped as investors evaluated lofty stock valuations amid recent record highs, seemingly disregarding the backdrop of COVID-19 and political turmoil. On Monday, the Dow Jones Industrial Average lost nearly 90 points, dragged down by a 2.3% drop in Apple stock, while the S&P 500 dipped 0.66%. And global oil market prices rose above $56 a barrel earlier today and stayed close to an 11-month high as tighter supply and expectations of a drop in U.S. inventories offset concerns over climbing coronavirus cases globally. Brent crude had climbed 1% to $56.24 a barrel, while U.S. West Texas Intermediate gained 0.8% to $52.67. Saudi Arabia has said it will cut output by an extra 1 million barrels per day in February and March to stop inventories from building up. The latest U.S. oil supply reports are expected to show crude stocks fell for a fifth straight week. Oil also gained on the expectation of a further drop in U.S. crude stockpiles. And in metals, gold prices ticked higher earlier today as Asian stocks slipped on a political ferment in Washington and a global surge in coronavirus cases, although a firmer dollar and higher U.S. Treasury yields limited gains. Spot gold rose 0.2% at $1,847 per ounce, while U.S. gold futures eased 0.2% to $1,847. Among other precious metals, silver gained 0.8% to $25.11 an ounce. Platinum rose 2.3% to $1,055.23, while palladium climbed 0.3% to $2,378. And domestic commodities market update is next. To stay with us. As the African Continental Free Trade Area Agreement kicks off, there is an auto industry development policy which is meant to support the domestic auto manufacturing industry in Nigeria, but it is now conflicting with the objectives of the AFCFTA and part of the ECOWAS protocol. This means that Nigeria is being forced to re-evaluate the auto industry policy because of its membership in the AFCFTA and ECOWAS, as the federal government has agreed to reduce the import duties and levies on imported cars. But what will be the corresponding effect of this reduction in import duties and commodity prices? Mayowa Ige, one of the research analysts with Financial Derivatives Company, will tell us. Hello, Mayowa. Good afternoon. Good to see you.
Hello, Mr. Good afternoon. Thank you for having me.
So with the federal government agreeing to reduce the import duties and levies on imported cars, what will this mean for the price of cars and its impact on transport fares, which has already increased by about 73.84% year on year, and inflation rate slightly above 15%?
So this new bill is actually not a bad development. It's actually a good one. And then with this, you'd expect that you see a drop in the prices of cars and also a shift from the use of second-hand cars to new cars. However, there are factors that will limit the impact of this bill. And then two of the factors I'll discuss, I'll talk about there's the factors of devaluation of the naira and the exchange rate, and also disposable income. At this particular moment, more people are focused on purchasing essential goods and not cars. Cars would more or less be termed luxury goods if you look at it, especially new cars. And so looking at it critically on transport fares, I do not think that this new bill will have an impact on transport fares. What would really impact transport fares would be more of the price of petroleum and diesel. And then transport fares account for about 6.5% of the inflation basket, which isn't very significant. So this new bill on transport fares on inflation will not necessarily make a significant impact, really.
Now, food inflation in Nigeria is currently at 18.3%, and one of the major cost drivers of food inflation is logistics costs, which involves the cost of vehicles and the cost of diesel and petrol. Now, do you think this new move of reducing import levy and duties on vehicles from 35 to 10% will help to reduce commodity prices?
The Minister of Finance had earlier mentioned that the reduction of the import duties and levies was targeted at reducing transportation costs, as it's a major driver of inflation, especially food production. But like I mentioned in my earlier, you mentioned there's the cost of the vehicle, and there's also the cost of fuel, diesel. For inflation, it's more of the cost of PMS and diesel driving the increase in logistics costs. So the reduction in price of vehicles will not necessarily make an impact. And then again, looking at it, the truth is at this point in Nigeria, we should be looking at exploring safer and more efficient means or other means of transportation, such as the rail, and not be looking to increase the number of trucks that we have on the road. The reduction of import duties on tractors would actually have an impact on the price of commodity prices, because increased agri mechanization will lead to an increase in production, and increase in supply would lead to a drop in commodity prices.
Now, globally, the demand for electric vehicles has risen by 9% in recent years. Now, with improved batteries, more readily available charging infrastructure, and price parity with gasoline and fuel-powered vehicles as major drivers, the sales of EVs is expected to rise by an estimated 30%. That's in about 2025. Unlike the global environment, the use of EVs in Nigeria is non-existent. So what is the long-term viability of the auto industry in Nigeria and other oil-dependent countries?
So for Nigeria, our transition to the use of EVs will be slow. EVs, to use electric vehicles, you need a good power infrastructure, which is lacking in Nigeria. And our road infrastructure isn't even really great. So these factors would actually slow the rate of transition, even if people were thinking about it. That's that. And then our auto industry is at its infancy stage, really. So to improve upon our auto industry and also look at the catching up with the global trend of transitioning to the use of electric vehicles, Nigeria has to address these factors that would limit this transition, and also look for ways of building our auto industry. And then looking at other countries, we can look at Saudi Arabia. It's an oil-producing country, and even with the fact that it's an oil-producing country, Saudi Arabia seems to have realized the global trend to electric vehicles, and they have started making investments in electric vehicles. So Nigeria also needs to think ahead, think long term, and start putting all these plans in place in order to help our local auto industry.
Thank you very much, Maiwa. We do appreciate your time. The International Fund for Agricultural Development has partnered with the Green Climate Fund to set up a new investment program aimed at supporting governments in the Sahel. IFED and other GCF accredited entities will submit projects for funding consideration by the GCF's board under this new Great Green Wall umbrella program. Project activities will aim to restore ecosystems and tackle the interlinked issues of climate change, job creation, poverty alleviation, food security, and peace building. The executive director of the Green Climate Fund explains that with an expanded focus on strengthening sustainable agricultural value chains across the region and increased private sector investment in decentralized renewable energies, this program will boost climate adaptation and resilience of millions of people, as well as supporting local ecosystems and biodiversity. And the International Monetary Fund has approved an immediate disbursement of $487.5 million for Angola under the Extended Fund Facility Agreement. The agreement aims to restore external and fiscal sustainability, improve governance, and diversify the economy to promote sustainable private sector-led economic growth. According to the IMF, the implementation of debt reprofiling agreements and extension of the debt service suspension initiative through the end of June 2021 will provide significant debt service relief and help reduce risks related to debt sustainability. The IMF also approved Angola's request for waivers of applicability and non-observance of performance criteria and modification of some performance criteria, indicative targets, and structural benchmarks. And Tanzania has set up a National Convention Bureau to promote conference tourism as a way of speeding up the industry's recovery from the impact of COVID-19. The permanent secretary in the Ministry of Tourism says that Tanzania's diplomatic offices in various countries around the world will be used to canvass for more international conferences to be held in Tanzania. The NCB will function as a department under the coordination of the Tanzania Tourist Board and handle all arrangements and bookings for international conferences, symposiums, conventions, and other meetings. Last month, the ministry launched an electronic database to monitor the quality of tourists and visitor accommodation services in the country. The accommodation services in Tanzania will match East African hotel classification criteria to determine the quality of service delivery to tourists and other visitors to Tanzania and other East African community states. And that's a wrap on the program. Thank you for watching. I'm Chimezi Obi Iwago.